Hey everyone, welcome in. Just giving it a couple more minutes for everybody else to join in. Welcome to tonight's live. Guys, we're going to give it a couple more minutes, looking for a couple more joiners, and then we'll start with the live. Welcome to tonight's live. Oh my God. You want to join Puppy up here? Oh my gosh. Okay. Everyone, welcome to tonight's live. Today is Sunday, July 28th, last Sunday of the month. We're going to go over a couple of red folder news throughout our calendar. The calendar that I use is Forex Factory, and then we're going to get started. It is right now 8 p.m. Eastern Standard Time, New York session time. And without further ado, let's jump on the Forex Factory calendar, right? So, what are we looking for on the Forex Factory calendar? We're looking for red folder news, right? Sometimes orange folder news does give us a little bit of increased volatility, but what we're looking for the majority of the time is going to be the red folder news. Welcome to tonight's live, everybody. Today is Sunday, July 28th, and it is now 8 p.m. Eastern Standard Time, New York session time. We're going to go over Forex Factory first, and then we're going to jump on the charts, right? We're going to go over first the red folder news events for the week so we can prepare for the week ahead. And then we're going to jump onto the charts and see what the pairs are telling us pretty much, right? So when it comes to Forex Factory, right? When it comes to the news itself, We're looking for red folder. Red folder are indicated by these little red symbols next to the actual currency pair itself. And pretty much when it comes to red folder news, that just means extreme volatility index when it comes to the markets themselves. So be very, very cautious when you're getting into your positions. And if you do have positions open, make sure you have your stop losses set. Sometimes your stop loss gets pretty much ate up and it goes right through the price action, goes right through your stop loss, and then you get a significant loss. So be very careful, especially when it comes to like the Forex prop firms. They can be really shady with that, right? Sometimes they don't hit, even though they should have hit, but it continues going at a loss for you and then wiping out your entire account. I've noticed that when I switched over to futures, that really doesn't happen as much unless you're using TradingView. TradingView has had its issues when it comes to like high volatility, high volume red folder news. So I kind of like leaned away from that. I use pretty much TradingView right now as a demo account. So I can link that demo account to my TradingView. And then inside TradingView, I'm able to trade the TradingView account. Now, a great thing about using futures is you can copy trade and there's unlimited copy trading as well, as long as you get Replicanto. So Replicanto, what I do is I get the TradingView account that's a demo that sends the signals to my Replicanto account, and the Replicanto account copies everything to all my prop firm accounts on futures through Rhythmic, which is fantastic. And then it supports pretty much every single futures broker. So definitely look into it if you have the time. And if you have multiple accounts, it makes life so much easier than trading each one by one. Now, without further ado, let's jump onto the Forex Factory calendar and let's see what we have in store. So Sunday, July 28th, we have nothing over here, as you can see. Going into Monday, we have no high volatility. We have a couple yellow folder news events, just as business as usual. We're not really seeing too much, especially Mondays, right? Mondays don't do too much except just set the tone for the rest of the week coming up. Tuesday, what do we see? We see Euro all day, right? The Euro red folder news. Going into New York session, you see USD at the New York Open 30 minutes right after, 10 a.m. We have JOLTS, job openings. We have in the Asian session, Aussie dollar, and then CNY. JPY, as always, tentative. I've always noticed that the JPY is the majority of the time is tentative. So yeah, do with that as you wish. Wednesday, we're looking at tentative JPY in the Asian session. So it's kind of like overlapping from the previous day because I'm looking at it New York session time. For the Asian session, that's literally just the same session. Looking into the London session, Wednesday, we have Euro, red folder news, followed by USD in the New York session right before we open, about an hour and 15 minutes, and also an hour before the New York Open at 8:15 a.m. and 8:30 a.m. We're looking at red folder news for USD. And then 30 minutes after the market opens with USD, New York Open, we're looking at another red folder news, and then FOMC, 2 p.m. Be very careful on Wednesday. It's usually a pullback day for Wednesdays, and the fact that we have FOMC, we're gonna have a pretty screwy week ahead of us, especially with the rest of the days. Right, going into Thursday, we have in London session GBP. We have that a couple of times, right? And then an hour before the New York session open at 8:30 a.m. New York session time, we have USD. 30 minutes after the New York session open on Thursday, we have USD again. That's ISM manufacturing PMI. Going on to Friday. What do we see Friday? Friday Asian session. Excuse me, London session. We have CHF, CPI. Then we have an hour before the New York session open, we have USD 3 times. Awesome. Let's jump on the charts. Yeah, my charts are a little bit messy because I was expecting a lot of different things to happen. So we're going to go over a couple things, right? So right here, we're looking at it on the 4 hour. Let's look at it on the daily. It's a little bit cleaner on the daily. Let me clean this up. Remember, guys, I don't really screw around with the charts too much until we look at it together, because I want it to be as pure as possible in a way, right? So what are we looking at right now? Here on Thursday, July 11th, we see we have this massive bearish engulfing candle right after an all-time high, but it was rallying up constantly, new all-time highs almost every single day, right? It went from weekly to almost daily. We're seeing all-time highs. So it's really hard to gauge when the pullback was going to happen. So the best bet was to ride it and be very bullish as possible. So where are we looking here? After this happened, nothing really happened on the daily. There was no fair value gaps. But if you zoom in onto the 4-hour itself, you're going to see on the 4-hour, you had this 4-hour candle, which is also a news candle, left this massive imbalance here. There's an order block over here. And then you have the fair value gap 50% mark right there. You could have gotten into an entry there and then gone into like a lower time frame. On the lower time frames, you're looking for something kind of like this. And you're getting in at the halfway point of the fair value gap 50% mark. So as you can see there, that would have been a really clean entry. But up until the point where it actually did happen and that respected it, there was no stopping odds, right? So there was no stopping it whatsoever. Right now, where is the price action? It went all the way down to like here. And then price action the way it is right now, you're looking at a 4.27 to 1 risk to reward. But you wouldn't have known. You would have gotten stopped out over here, right? Constantly stopped out because price action just kept going up and up and up with NASDAQ. NASDAQ just kept pumping itself. So we had that fair value gap, 50% mark. That's why they're so important to mark out. We had that. I respected it. Dumped. I'll leave this the way it is right now. I'll just make it a little bit lighter. And then we'll check out the rest. Boom, daily. What happened with the daily? Daily itself left this daily fair value gap 50% mark here. Price action did not come back into it. And that's fine. Then we also had another daily fair value gap over here, which is this actually here. So what happened? Price action broke through it with such massive price action that it made this into an invalidated fair value gap, or what we usually call it is an inverted fair value gap. So now it became an IFVG. So now this area here and then this area here, they're both IFVGs, inverted fair value gaps. Go to the weekly. There's no weekly confluence. Jump back to the daily. So this little fair value gap right here, that's sitting right above this order block 2, that becomes an area of confluence for us. So that in itself was violated, and instead of being an area of support, it is now an area of resistance. So we should be expecting price action to come right back into it, and then continuation to the downtrend, which is what happened here. Super clean. Price action came right back to here where we had marked out 2139.75 and respected it, tapped into it, and then continued its way down. So we're going to remove this because it's already been tapped into and mitigated. And then what else do we see on the daily? Daily, we have this other one here. So this is the fair value gap here. And then it also overlaps with the 4-hour right here. So that's why we have that marked out. This fair value gap completely disrespected this one, right? This massive bearish engulfing candle. Look how big that is. This is on a daily candle. That's massive. That's a massive dump. Disrespected this fair value gap, converted it into an inverted fair value gap. Now this area here is an area of confluence. You have this fair value gap here overlapping with this fair value gap here. That area is now a resistance area. Look at that beautiful overlap. We're going to use that as a bearish entry. So set your alerts for this over here. We're going to be looking for price action to come over here. And then on the 5 and 15 minute time frame, that's our entry. Right? Price action 19628.75. We're waiting for this pump up into here. Tap into it and then continuation down. This next fair value gap that we have down here, this bullish one, was already disrespected. Price action closed below it. Completely disrespected. Now it's coming right back up. Once price action taps into here, this is a daily candle, and it starts dumping. This has no support. The next is going to be this sell side liquidity over here. So it should be reaching down this level here where you see this yellow line. So what we're looking for and expecting is price action dump into here, get some liquidity, dump here, pull back, and then continuation. That's what we're looking for price action to do for us. So set your alerts for this level over here. Like I said, it's 19628.75. We're looking for that level right there. This I'll remove to clean up the charts a little bit. I'll remove, I'll leave it there so I know it overlaps with that. And then I'll leave that one there too so I know it overlaps with that as well. This was a weekly. We're going to label this as daily fair value gap. This is another daily fair value gap that we're watching. For some reason, I had it as weekly, but I think these points actually move around sometimes because there's no way they're always like moving around like that on their own. So yeah, this is a weekly over here, tapped into mitigated. We should probably see that. Being retested soon. So I'm going to just draw that out there. And that could be a really nice liquidity level for us. Let's do sell side liquidity. Or not. Let me just do weekly. Fair value at 50% mark. Then we have those two different confluences there. We have another one over here too. But this one seems more high quality. Because this will probably be your order block. And then with the overlap over here between these two fair value gaps. So yeah, that's what we're looking for, right? We're looking for price action to come test out that bearish fair value gap and then continuation down. So we're looking for bearish positions, right? That's what it looks like on the daily. It's a little bit more clean. This is from the market mind indicator. It's telling us that on the daily we're at an extreme premium. So we should be looking for shorts. And now with the change in our trend, change in state delivery, we're looking for bearish positions, which were pretty good, right? So this area here, that 19628.75, definitely have your alert set for that. That's going to be a really nice area for us. And then for it to seek down here. Cool. Let's check out on the 4 hour. What do we see on the 4 hour? 4 hour, we see an overlap over here. 4 hour, we also see this fair value gap that was bullish became inverted. So this area around here, this daily fair value gap 50% mark, is looking very, very good on the lower time frames. And then over here, this bullish fair value gap was inverted as well. So 4 hour, not as clean as the daily. We're looking for those daily levels. So we're going to stick to that bias. We're sticking to that same daily fair value gap that we're looking at. Cool. Let's go on to the next one, which is going to be gold. Let's check you out on the weekly. Oh yeah, consolidation. Consolidation king. So I put these yellow backgrounds when it's like consolidation. It's like strong consolidation. Right now it's still consolidating like crazy. Create a new all-time high here. This was an all-time high. This was an all-time high. This is an all-time high. But now it looks like price action is still consolidating, but it's a little bit more bearish. Excuse me, a little bit more bullish. Because you can see here the latest low is right here, but it also tapped into this daily fair value gap 50% mark. Price action came right back into it, tapped it, and now it's continuing up. This fair value gap has already been tapped into and mitigated. So then we should be looking at this all-time high as seeking on the liquidity for it. Price action should be looking for that because we already tapped into this fair value gap 50% mark over here. Let's see on the 4 hour we see anything clearer, right? So we're bullish. This inverted fair value gap right here. So this is a bullish fair value gap. It got broken through. In 1 hour and 30 minutes, it will be officially inverted by this candle. It's a 4-hour candle. And then we can probably look into this area here as an entry. It'll probably retrace a little bit and then continue upwards. Looking at it on the 1 hour, 1 hour has already been tapped into. Completely disrespected it. So on the 1 hour and on the 15-minute. See, because even on the 15-minute, boom. It came back into, got liquidity, and now it's continuing up. So it looks good. It looks like it's going up. So I'm bullish on this. You can still get in because we want to write it out. We want to write it out on a higher time frame. You can probably get in now actually, and then ride it to the all-time high itself. Once you're in a good amount of profit, set your stop loss to break even because this isn't consolidation because it might actually tap into that fair value gap and get rejected off it completely. Now, safe bet would be take some profit over here at this fair value gap 50% mark and then take your full profit at the all-time high. If you want to be extremely secure, safe about it, target this peak here right before the all-time high peak. So you do like about 30% here and then full take profit over here, which is at $24.79. So it's about $11 right before the all-time high, just to be on the safer side, right? Just to lock in those profits. Don't get greedy. That's usually what happens to me. I get really greedy and then I don't lock in profits when I'm extremely like in the green. Don't let that happen to you. Let's move on to silver. What do we see on silver? This is on the daily. What does the weekly say? Weekly says we are bearish. We have this beautiful bullish fair value gap on the weekly. Disrespected. Came back up. And then here was disrespected again. This sealed the deal. So set your alerts over here, 30.15. That's on a weekly level right there. And then we also have this weekly level here where we're expecting the price action to come right back up. Because on the higher time frame, right, silver is bullish, but it looks like this is a nice fat pullback. We can probably play this out going into this FEG and then continuation down. But for now, we're expecting this price action to continue going up, tap into here. We'll get better confirmation on the daily. For the daily, this actually broke through, right? So this broke through the fair value gap. So this fair value gap's no good. Now it becomes an inverted fair value gap. We're expecting this candle here to break above this candle, pull back into this fair value gap that's become inverted, and then continuation to the upside. We have to be very careful here because since this has been inverted, we should see nothing really supporting it. So price action should dump underneath it and then come back into it. So we'll see how price action develops. This candle probably won't even break through here, and it'll just continue dumping, or it'll go all the way to this 50% mark, continue dumping, or if it goes through and closes above here, then you can feel comfortable using this area here as a confluence, as a re-entry for the upside to target this buy side liquidity that's at 32. Going on into the 4-hour. Yeah, we're expecting this to come right back up here. This is the 4-hour over here. So it needs to break above it, close, and then retest, and then continue up. Or completely denied, dump, pull back, and then continue dumping. So keep an eye on this area. This area here is, so you can set your alerts, 28.335, or just put it for 28.33. So here, just keep a close eye on that, right? Going on to Euro. Weekly. Remember on the weekly, we are bearish, right? Euro USD is bearish. Looks like we're finally doing another pullback over the trend line. Going down into the daily. This is what we're looking at the daily. Boom. Fair value gap here. Broken through. Inverted. Fair value gap here as well. Tapped into. Mitigated. Yeah, tapped into it 3 times. Boom, boom, boom. And then this one. This has been tapped into and mitigated as well. This is not going to support it. What's supporting this right now is this order block here. Tapped into the order block and then came back up. So it ping-ponged back and forth with the order block. What does the 4-hour say? This is where the fair value gap is on the 4-hour, which overlaps with the daily. Tapped into it. Losing momentum. You got to make sure to watch it. So for now, I'm bearish. This change in structure right here, boom, boom, to bearish, and then boom, boom, to bearish. I'm looking for a clean bearish entry. You can probably set an entry over here, 1.09070 to feel safer. Stop loss over here at 1.09250. So it'll look something like this. And then continuation down. We're targeting this daily fair value gap here. And then you do take profits along the way. Sell side liquidity right here. Take 25%. Take 25%. And then do your full take profit here. Or if you want to be extra safe, over here at this 50% mark of the fair value gap, that's at 1.08110. All right, let's move on to GBP. That looks super clean. There's actually a weekly fair value gap here. We have a weekly fair value gap that it's sitting above. It's tapped into, mitigated here by this candle. Now it's sitting above it for this week. We are on a bullish trend, so we're looking for bullish positions. That looks like a very clean entry for us. On the daily, it broke through this fair value gap. It mitigated it. And now it's pulling back up. I should be a little bit cautious about that, right? Because now that fair value gap is an inverted fair value gap. Not too much gives me good confluences over here. There's not too much confluences here that make me feel comfortable. So what I'm looking at is over here, I'm going to stick to this bias. We're looking for a bearish bias. We're looking for a pullback all the way up to here, 1.2975. That's a 4-hour fair value gap 50% mark. Right after, completely disrespecting this bullish fair value gap. So we should see some kind of movement, some kind of reaction to this area. Here, on a weekly, we tapped into it. Look at these wicks. A lot of bullish pressure. You can probably enter here, set your stop loss below the fair value gap because it's on a weekly, and then just target this fair value gap here. Target 1 is your buy side liquidity here, and then full take profit at the fair value gap here. Yeah, it's not too clean for me, the chart. On the daily, it looks like, yeah, it's going to go back up. Tapped into here, mitigated, and on the weekly is the same thing. Tapped into here, mitigated, going up. Let's look at JPY. That's the daily. Let's look at weekly. Weekly, boom, pull back. It's pulling back hard after dumping that hard. So many different zones for us. This 4-hour fair value gap was broken through, mitigated. Now it is an area of support. That's on the daily. If you would have set your alerts with the last week's live, you would have seen this. Tapped into it. Continuation to the upside. The week before last, excuse me, because we called this out before it happened. That became an area of support versus resistance because it broke through. And that would have been a beautiful clean entry for you. Then we also have this one here on the 4-hour. We're going to remove that. Just keep it a little bit clean. Then we also have this one, daily fair value gap, bullish, tapped into it, close enough over here. We're going to call it there, mitigated, continuation to the upside. So this has already been tapped into mitigated. This is still live. That's on the weekly. That's 0.00633310. And on the 4-hour, what do we see on the 4-hour? Tapped into and mitigated. It's just at the edge of it too, of the fair value gap. But we're not gonna consider it inverted because it didn't break through with force. But it is mitigated. So this shouldn't really hold too well. If anything, price action might tap into here, 0.0065025, and then continuation to the upside. This has been tapped into and mitigated. This has been tapped into and mitigated. So the only thing that makes sense would be for this to dump into here, shoot right back up, continue the uptrend. And yeah, guys, so that's pretty much it for this week. We went over Forex, metals, and then some USD pairs that you can definitely trade on Forex, and you can also trade on the futures. Remember, your Forex brokers are going to have different pricing depending on the broker versus what you see on my charts. So just look at the areas themselves and make sure you set the alerts on the proper areas for the fair value gaps and for the inverted fair value gaps. And yeah, that's pretty much it for me today. Be very careful with FOMC this coming week. Price action might be a little bit messed up going into the week. So be very cautious, especially if you're a beginner. Be very careful with the red folder news, especially as a beginner. And have an extremely profitable trading week. See you next week. Same time, same place, 8 p.m. here on YouTube. Goodbye.